Wednesday, the 3rd of July, 2024. This is your Bitcoin update. And yeah, we're seeing a pretty bad move down, a pretty dumpy start to the day here on BTC. Are we going to hold this as support, or are we looking at this as being like basically another lower high, which is what it is, that leads us to another lower low? So right now I am still thinking this has a decent opportunity to get a move higher, and we're still trading within this within this whole range. And if you're long from the move down that we had at the end of June here, there's certainly no invalidation here. We're just still trading within this range. We've seen price action like this before. It was always unlikely that we're going to get out of this in like one go. We were looking at this as being just stairs up. Can it break through each level? If yes, then look for the level above. If no, then look for the level below. And we're still trading with that kind of idea in mind here. Now, from the daily, there are a few things that quite clearly have led to the downside that we're seeing today. First of all, there was significant weakness yesterday from Bitcoin whilst other markets were pumping again, and we've seen that happen so many times. And then because we had a close back outside value area of this range, back inside the previous range that we've been holding, it is normal now that we're seeing that rotation back down to test into support, and we're coming into some important support levels here. There have been some imbalances left below, and that is now just being cleared up, and that could lead us to once again another higher low before we start to push back higher again. So it's very much just seeing where this ends up on this particular move. I'm not really seeing aggression this morning. I'm seeing a relatively low volume move down that's hitting stop losses and hitting liquidations. I would say the aggression would come if we lose 60k and we start to close higher time frame, like 4-hour candles below 60k again. I think that's when we could see that aggression and that expansion back towards the downside, in which case, okay, I do think that we have to be looking at the lows here at 56. And because this has already got aggressive once, and we were doing that from here, I think that we could see that further expansion to the downside that takes us down towards 52, with like that being another capitulation wick that maybe gives us that final low. Because what we have not seen yet is a low that looks like what we had back in April, where you have a very quick move down that gets immediately recovered, that then holds and then moves towards higher prices. We haven't had that yet. So we've had a mini capitulation, but there was no quick recovery from it. So therefore, maybe there is still interest in this moving lower to take out these range lows before we do get that reversal. High time frame, I don't really care too much like what's actually going on here, because overall I still am very confident in the macro and believe that we're going to be seeing like real good price action over the course of, well, we're now in Q3, so Q3, Q4 was always the plan for myself, that this would be a bullish quarter. But it's very, very normal that at the start of a new quarter, remember we're at the start of a new month, a new week, a new quarter, the second half of the year, so another 6-month candle coming up. It's very normal that we put in some downside to begin with before we find that where the bid is, essentially, and then we're looking at the rest of the quarter and the second half of the year being bullish. Now we're just hitting a very important level here. So this is a daily level. And I would, if I wasn't watching this right now, would probably look to scalp a long off of this. So I'm going to go down onto the 4-hour, and we're going to have a look at this over here. And then what we can see is this trend is clearer on the 4-hour. What we've been doing recently, it has been a lot clearer on the 4-hour, where we have clear highs, lows, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. All right. You can't consider this to be a higher low at this stage because it did not take out the high. All of this here is just internal price action. This is a corrective move, right? As you would see if you're in an uptrend, like we had like within these, you have these corrective moves. It's all internal. You're not taking out lows, and then you get continuation. So what we are seeing so far is very much the potential for this to be continuation to the downside, as there has not been a change in trend. If you look at the correction that we had, all right, where this came into, it came close to that 1-to-1, where we had confluence there, with there being a 4-hour gap and there being this order block up at the highs, and we also had a daily OB up there. And then if we're looking at this being like a simple ABCD correction, you had the A to the B, then you come into that golden pocket 618 area, and then you expand close to that 1.618. Now this could have gone a little bit higher. All right, this could have gone a little bit higher up towards 64K. But of course, we weren't able to see, if you, at that stage, if you were to get up here, then that would have been considered a sign of strength if there were closes up here. So the market just essentially, you put in this high on the Monday, SFP Monday highs, well, SFP, the Asia highs during that New York session, come back down, and then we've just seen a move down since then. So overall, yeah, this so far looking like a corrective move within a downtrend, but it does have the potential, I believe, to hold as being a more significant higher low that can then take us higher towards that 67K, which is the overall target for any longs that were taken down here. You had to be taking profit here, and this was a good place to look for shorts. And once again, you had to be taking profit here, and this was a good place to be looking for shorts. I did say this in the Discord, basically saying, if we could bring this up quickly, but basically, I'll pull it up on here. This was what I was saying when we first came into this 4-hour gap, was that same situation. Where are we? Same situation here. This 4-hour gap is the previous one, can short within this area until it breaks level to level. And that is exactly what we've been seeing. And then that gave the opportunity for shorts. And that's what we are still holding on BTC. So I'm long from down here and short from up here, basically, and just waiting to see where this ends up. Now, what we've done on here also, we can see as we got this breakdown, I can draw this. So this being the high, these are still good targets for if this does start to recover, and those are the highs that you need to take and close above in order to get a change of market structure, right? So we've got to get back above that 64,500. Now, what we've done here, if we zoom in, we can see this a bit clearer. So this dotted line being our range value area low. All right, this being basically the step up on the 4-hour time frame and the range that you would have wanted to see hold if this was going to get continuation. Now, what happened yesterday? We saw a sign of weakness yesterday, right? That was weakness here, closing back through the imbalance that we had formed on the move up on Sunday. So we had the Sunday pump. We then closed below that. That leads us to a very high probability that we're going to take liquidity, which is right here on this monthly level. Okay, so internal lows. You don't need to go for the whole lows. You don't need to go for these ones. You go for where the stops are going to be placed for anyone that's basically long from here. And the chances are stops are more likely than not going to be placed on that low right there, because that is the move. That is the latest impulse. Okay, so stops taken, that has basically done what it needed to do from a sign of weakness. And also we can see there was acceptance back outside value area. And what happened previously, when we were outside of value area, where were we ranging between? We were ranging between the monthly level and we were ranging between the value area low. And we had seen this, okay, a little deviation here. Once you break through, you try to hold your back into there. So now we're back within this range again. So are we looking at this being a spring that sends us higher, or is this the deviation here where there was not high time frame acceptance back within value area? We did not get that continuation, and therefore that leads us to these lower prices. So a couple of things to consider here. We are just trading within this range, and for now this is still acting as support. If you look on the 4-hour here, everything has been cleaned up again. So you have these little gaps, and once again you're going level to level. There was, come over here, All right, another imbalance that was here. You get a close below, you end up taking the lows there. And then again, the only other area where there's real significant imbalance here is this low. So what we want to see now, line in the sand for anyone who is basically positioned long from these lows or the ones we had back a month or two ago, is you just cannot see 60k lost, and I'd say 60,300 basically. We start to close 4-hour candles down here, and I do believe that we're going to be seeing that 56k. So it is just a case of reacting to what the market is giving us and going from each level and just trading it as that. So that this can then go essentially. You've traded through that, you've corrected that move, we're then getting this move down. This is all clean, all right, this is all balanced. And what price needs to do now is hold here and impulse back through all of this, because if this starts to bounce, there's not really anywhere that can reject within this whole down move. So if it does bounce, I would expect it to be a pretty quick bounce, and we will be going on to take these highs as quite an impulsive move, probably similar to what we saw back here. Going on to some lower time frames here, we actually are getting a decent reaction off of this daily. So as I just said, this would have been the level that I would have been looking for a long from, okay, being essentially the lowest level you can get before your invalidation. Yeah, and we almost did that previously, right? We had these single prints here, and price came into what was essentially the lowest level possible before an invalidation. And what we're seeing again here is the lowest level possible before there is another invalidation. Also, we have almost filled that CME gap. So there it is. If we look at where this was, I mean, we're pretty much there. So I was kind of thinking, I thought we'd come back for it eventually. But I was thinking we could get maybe a little bit of a move higher. But yeah, once again, you can see here, you had the rejection off of the outside of the gap where price came down. It tried to bounce from there, was unable to do so. And then as soon as you get acceptance, this is the thing where you have gaps, where you have single prints, where you have imbalance. What you need to be looking at is you do one of two things basically, and it can be both of them. Or it can be both of them eventually, right? So you're either going to reject from it and you're going to get continuation. So you're going to say, no, we're not bothering with this, okay? We've tapped into it. We've tested the imbalance. We've tested the gap. And we don't want price back here. We accept that price is worth more and it goes higher. Or if price does accept, all right, so this is rejecting value within that gap. If price starts to accept within it, then you're very likely to trade the whole way through it. So just very simple rule that you can use with all of your trading. If you see gaps, if you see single prints, if you see fair value gaps, all of these kind of things, you will either tap in and continue, all right? You reject that is value, or if it confirms that it is value, then you're going to trade the whole way through it. And that's precisely what we're seeing here. And we go back to this, all right? You've had these occasions where you reject, right? You reject this gap, okay? But as soon as you try to bounce, then you get acceptance. You're like, actually, no, we're going to accept here. Then you trade the whole way through it, all right? And then it's the same here. You reject this gap, right? Yeah, you reject it initially. And then once you get acceptance back within it, you trade the whole way through it. And then another similar situation here where you reject this gap here, right? And it's just A, B. First of all, you come in, you reject it, but it can't get higher. Then you get the acceptance, so therefore you trade all the way through it. And it's just a simple process that anytime you get an imbalance on the chart, you can just use that time and time again. It's one of two things that plays out. And quite often when you're in a trend, it's both of them. So you get the rejection off of a gap, and then you get the acceptance later after a little bounce, and then you go the whole way through afterwards. That was a little bit of a sidetracky kind of thing. If we have a look at the TPO charts, all right, we'll pull those up. Then the other thing that we have had here is we were watching this for these levels the other day. Now we had these weekend NPOCs. Now what I tend to do on a weekend is to merge both of them together. We wait, and then we get a composite for the weekend, right? what we could see again here was that we did have that 61k naked point of control, and of course that weekend open that was down here at 60,400. Now those being two more imbalances that are on the chart, prices come through, cleaned up that MPOC and come down to hit that lowest daily level. Now there's not really anything else here that, from at least the settings that I have on this chart, that we need to really be dealing with. There is a decent low on the low that we put in back here. We don't have poor lows. I mean, you've got a couple of TPOs on there. That's decent. You traded back through, you cleaned up the single prints. We're coming back to that area. So I'd say overall within this little range here, this as a tail is looking fairly decent. That way we have the volume is holding, so as long as we are still holding within this range, then it's looking okay. But that leads me once again to the fact that, look, where is that POC? It is at 60k. If we do start trading below 60k again, right, then that is acceptance back below this level. It is acceptance at 60k, and therefore we are likely to see the continuation of that trend that takes us down towards 56. All right, so you cannot go below 60k if you're bullish. Basically, you cannot be closing any kind of candles down there. We have rejected that is the market's rejected. It doesn't want it that cheap. It's kind of confirmed that already, right? But if it then gets acceptance within it, you're gonna trade the whole way through. It's the same as with the gaps and everything, okay? If we look over here and check out this, then what do we have on the delta? Nothing too significant. Open interest is weird. Let's look on the 1 minute. This whole move down, nice drop in open interest, nice shorts opening on that low there. So obviously net longs being stopped out. There is the potential for this to be a very significant bottom that we have just put in, and that right down here looks kind of tasty. So line in the sand now for this bounce. If anyone had just taken the long from this, I would say we're looking at, you got some longs that open back up here that maybe are chasing this. Not too much. That looks like shorts closing. This is actually looking quite healthy. And what we'd want to see now is that we are not losing 60,470. Yeah, around about 60,470 acting as support. So this can dip into it, but you'd want to see that push back off. Resistance here, 60,720. So if it can get through 60,720, then I think it can recover most of the move that we've seen overnight here. That's the first area that we'd really be looking for. You've had decent liquidations. We're starting to get these longs coming back in, and this hasn't been the case at all today since around about 6 a.m. and that is UTC. The last time that there were any real trap traders. So if this can get back through 60,700, then I would be looking for a move back towards 61,200 that starts to maybe free any longs that are trapped. You can see them from down here, but that's looking on the very low time frames. I'm trying to do this as like a daily update video, and I'm getting a bit ahead of myself. So we'll go back to the chart here, and it is once again a bit of a level to level kind of situation. When you actually zoom out slightly, we can see that the reaction here is not all that great yet, but we do need to be holding this level if we are to be looking for higher. I don't think there's too much need to be going over other analysis right now. I've done all the technicals. I'm not going to bother looking at the ETFs. It was just a neutral day yesterday. We know that there's still spot premium and all of that. We know that we're still in negative funding quite often, so no need to cover that. I will just wrap this up by saying, yeah, we're approaching line in the sand kind of levels. If you're bullish here and you're looking for a higher low, it cannot go below 60k. Otherwise, kind of invalidates those ideas. I think it's very likely that we see that the low that we put in, at least on Monday, is likely to get taken out, and maybe we see potentially a situation. Could that then turn into a double bottom? Of course, spot didn't hit that daily level, right, that we have from back here. Spot didn't fill that gap. If we zoom in, however, perps did. Are we looking at a situation where spot just comes back for that, and then we get like a nice double bottom thing here, and then it goes for the highs afterwards? Or is that then going to be looking much worse, and we're looking at that 56 to 52k zone as the next zone of support here? So as always, price can go up, price can go down, price can go sideways. We just take it level to level, and we trade based off of what the market is essentially telling us. And right now, it's telling us that we're going lower, but it's reached the best possible point in which to get a bounce, to come back into what is essentially the whole range value area low here. So yeah, on that note, I'm going to wrap it up. We'll see what the rest of the day gives us. I think it's likely to be kind of interesting. From a news point of view, we do have news today. So what would often happen on a Thursday, part of that's happening today because, of course, it is bank holiday tomorrow in the United States, and I mean it's essentially bank holiday in the UK as well, because we do have the elections here tomorrow. So there is the presidential elections, or the new UK Prime Minister finally getting rid of the Tories tomorrow, which will be very nice. But yeah, we do have a pretty stacked news day because of that, right? Where we have non-farm employment change, wholesale sales, industrial new orders, and FOMC minutes coming in today. So a pretty big day for news. Tomorrow, then bank holiday, and then on Friday we see news once again, as we get the other stuff, the unemployment claims that would often happen on a Thursday, then being pushed to Friday because tomorrow is a bank holiday. So yeah, thanks for watching. Enjoy your day. If you're panicking because Bitcoin's dumping, then chill on the leverage, right? Because we're fine. Like, this is just putting in a low for the quarter, and then we're going to be bullish again. So just ride it out, relax, enjoy your day, touch grass if you don't like watching this kind of price action. If you do like watching this kind of price action, just trade it. Trade what the market's telling you. It's very, very simple. Don't get caught up in bad positions, and you'll be fine. You'll be fine. So, cheers. See you later. Bye-bye.